Hello and welcome to Chapter 9 of Government and Nonprofit Accounting. Chapter 9 looks at financial reporting for the government entity. So when we're getting ready to report for the government entity, first we have to determine what we're reporting and who are we reporting for. So we have first the primary government. This is the state or general purpose local government that we are reporting on. We also have special purpose governments that can be created that are legally separate from the state and the general purpose government. Usually the general purpose government is a city government. We also have special districts, commissions, boards, and other agencies. And so we think about what is the exact reporting entity and what all needs to be included. So who is completely accountable for this financial information? And we're going to talk about some of the kind of different rules about whether or not one of these entities gets included in the governmental-wide financial statements or as notes to the financial statements. Okay, so our primary government is either our state or general purpose government, state, general purpose, or special purpose government. There are a number of special purpose governments, usually a special kind of city government. Okay, then within those governments, we can have special districts, commissions, boards, and other agencies. We might have a managing board, we might have a couple of boards on special topics, we can have different kinds of commissions. And so what we need to do is decide which of those are a financial reporting entity. So financial reporting entity is those areas that the primary government is financially accountable. Okay, and there's a financial accountability test that GASB requires for financial reporting purposes. Okay, so as I said, GASB says that governmental financial reporting should report on all governments and organizations for which elected officials are accountable. Collectively, all together are the financial reporting entity. So this is the primary government, and then all of the organizations within the primary government. For example, in our textbook, we would have the city of Gingham, which is the primary government, and then we would have all of the organizations under the city of Bingham. So the fire department, the police department, capital projects funds, any there's a grant fund that's going to report to it, and these would all be reported collectively together. They're considered a single entity. Okay, then the accountability test is we're financially accountable for another organization if we appoint the governing board and we're able to impose our will on the organization, meaning that our primary government gets to make decisions or make rules about those decisions. Or there's potential for us to provide specific financial benefits to or impose specific financial burdens on the primary government. So the organization can produce money or produce liabilities on the primary government. Okay, so we look at this financial benefit or burden relationship, and a relationship exists if the primary government is entitled to the organization's resources, is obligated to finance the organization's deficits. For example, if there was a budget shortage, if the primary government was required to fill that budgetary shortage with their own funds, there's a financial relationship. Or if they're responsible for the organization's debt, there's a financial relationship. We also have a financial accountability if an organization is fiscally dependent on the primary government. Okay, and fiscal dependence means that the organization does not get to determine its own budget. So for example, we might have that the fire department makes budget requests, but only the city issues its budget. So then the city is the primary government, and the fire department is fiscally dependent on the city for their budget. They can't levy taxes or set rates or change their rates. They're also not allowed to issue bonded debt without the decision of the city. And so they are a fiscally dependent organization. In addition to fiscally dependent organization, we can also have some fiscally independent organizations. Okay, then we have something called component units. So component units are a legally separate organization for which the elected officials of the primary government are financially accountable. Component units can be nonprofit organizations, non-primary government, for-profit firms. Maybe example where you might have a city government that's financially responsible for a township, which is a legally separate organization. So they're the non-primary government, but they've been combined with the financial statements of the primary government. There's also a test about that GASB requires to determine, is there a component unit relationship between this entity or not. Okay, so we have, it's a blended presentation when the component unit's financial data for its funds and activities are reported with the same fund types and activities of the primary government. So if the reporting is the same as the primary government, it gets blended together and shown as a collective financial statement. Otherwise, there's discrete presentation where they get one or more columns in addition to that are separate from the financial data of the primary government. Okay, so how do we decide which one of those presentations that we have to choose? Okay, so we have to ask these questions. Is the component unit part of the primary government? Is there debt paid by the primary government? Do they exist to provide services for the primary government? Or are they exclusively benefit the primary government? Okay, is the governing body of the component substantially the same as that of the primary government? So for example, a board that's part of the primary government, if say like the mayor and some other staff of the primary government comprise the entire board of the component unit, then that's substantially the same. Okay, then we have to think about, is there a financial benefit or burden relationship, and is there any operational relationship for the government? So there is a decision chart in your book that can help you make this decision. Okay, so we have discrete presentation is used when the component unit does not meet the criteria for blending. So it is a legally separate tax-exempt organization that meets both. So remember, this is a meets both and not like the previous criteria where it was an or. So we have are assets held entirely or almost entirely for the direct benefit of the primary government, its component units, or its constituents. And it also has to meet the primary government isn't, or its component units are entitled to or has the ability to access a majority of the assets received or held by. Okay, and these assets are significant to the primary government. So thinking about what those assets might be, as I mentioned, there is a decision chart in your textbook. It is on page 379, and it is illustration 9.1 that tells you whether you're going to get discrete presentation or blended presentation by answering some questions, and then dependent on the answer that you get, you're going to do blended or discrete presentation. Okay, so a blended presentation happens when the funds of the component unit with the appropriate fund type and activities of the primary government, or a general fund of the component unit is a special revenue fund of the government. Okay, so looking at this is for the blended presentation is what kind of services does it provide? What are the activities of the fund? What does it type of fund is it? Is it a debt service fund? Is it a special revenue fund? Is it a capital fund? If the component unit has multiple funds, then those funds are reported by their fund type. Okay, and then it follows the major and minor, non-major for reporting purposes. So for example, if a component unit had special revenue funds, it would be reported in the same manner as the special revenue funds for the primary government. And if it was a major fund, it would have a separate column, and if it was a non-major fund, it would be aggregated with the other units. Okay, other types of government organizations that we need to think about for financial reporting or if we're a joint venture. So a joint venture is a legal entity or other organization that results from a contractual agreement. There is a financial interest and financial responsibility as part of that contractual agreement. Often some type of investment has occurred to benefit one or the other group. For example, it can be two or more participants as separate and specific activities subject to joint control. I can give you a joint venture example in the corporate world, but it's not as easy to think of one off the top of my head for a government entity. An example of a joint venture would be with Disney and Pixar. So when Disney and Pixar began their relationship, Pixar had technology that Disney wanted, but they didn't have the financial means to scale their technology. Disney wanted access to the technology and had the financial means to scale it to large movie production. And so Disney invested heavily in Pixar to make them a more successful company because they wanted access to the technology. They were a joint venture for several years, and then Disney ultimately bought Pixar out in full. So really there's that financial interest is one of the main things. Okay, joint ventures are normally considered other standalone governments. However, there are some special purpose governments that also meet the definition. For the financial reporting that we're going to be looking at is just really looking at primary government and its component units. Okay, so we have government financial reporting. That's also what we're going to be doing with Smithville this year. We're going to look at the end year financial reports for the city of Smithville. We'll talk about them in the next couple of videos, and then we'll do some examples that will be very similar to your homework and City of Smithville problems. So I'm going to stop there, and we will continue in the next video.